Hello everybody and welcome back to another temporary lecture. In this one, I'm going to be talking about volatility injections. So volatility injections are typically going to be your high impact news events, which are the red folder news events. I'll teach you guys how to look for these news events in just a couple minutes here. But first, I wanted to talk about your index futures. So if you're trading ES, NQ, and YM like I am, then you want to pay attention to 9:30 a.m. every day, as that will be your equities open. And you will see it's called a volatility injection because it makes price volatile. It makes price move. And for equities open, that's because it's New York Stock Exchange open when there's a large amount of traders flushing into the market. And so there's a lot of open orders that are being filled left and right. The second type is, as I previously mentioned, the economic news calendar. And the way to access this economic news calendar is going to a website called Forex Factory. And this is the one I like to use. There are multiple other websites as well. However, I like to use Forex Factory. And so once you're on Forex Factory, yours is not going to look like this. I'll just reset my filters really quick. Right. This is what your Forex Factory will most likely look like. Is you're going to be at the home page. It's going to show you today's news. The way I like to set it up is at the top right here, you can log in so that your filters save every time you go into your account. And that way here, the settings I like to use is I like to click on the calendar day first, click this week, and then apply. And that way we have an outlook on all the news that's occurring throughout this week. So dependent on which pair in Forex you trade or which market you trade, you're going to want to select your different currencies. So for me personally, because I only trade index futures, I only need to pay attention to USD news. And so I turn off all and I just apply USD. And then I like to turn off yellow folder news. Sometimes I like to turn off orange folder news, but I like to just keep it on just to be aware of it. I don't really pay attention too much to it, but it is nice to know that it's there. So going back to your filters here, for currencies, if you are trading Forex, and let's say you're trading Euro USD, then you would turn on Euro as well. If you're trading GBP USD, then you would turn on GBP as well. And then you have your USD here. So you would be aware of all three types of news events, not just USD. So for me personally, once again, I only trade a NASDAQ pretty much, so I will only keep USD news on. If you trade any other pairs, then you can turn on any other currencies that you need to. But once again, for me, using ES, NQ, and YM, I only pay attention to USD news events. So that's how I'll apply it. So pretty much what the economic news calendar does for us is it's a schedule of when we should be looking for high probability setups or opportunities. And the reason that is because each news event, how we look at it is smokescreen for the institutions or smart money to manipulate price. So here we can see going into this week of October 6th to October 12th, we can see we have no news on Sunday, Monday, Tuesday. So we can typically assume that Monday and Tuesday is going to be less volatile. It's going to be choppier and more in a consolidation state. As for Wednesday, Thursday, and Friday, you can see that we have high impact news. So once again, let me just turn off my orange folders here and have you guys focus on the red folders because these are the most important. The red folders here, you can see that we have a news event at 2 p.m. on Wednesday. We have at 8:30 on Thursday and 8:30 on Friday. And so typically what I like to do is I like to hunt for opportunities when there is high impact news event. And that's usually when the opportunities in the markets are the highest probability. So if I were to go into this week, what I would be looking for is some sort of consolidation occurring on Monday, Tuesday to build up liquidity for the rest of the week to trade into, manipulate, right? And then drive away from that, using these events to distribute away from that manipulation. Going to the next week here, we can see that there are also gray folders. And so in the filter, I will leave on gray folders because gray folders mean it's a bank holiday. And just like a no news day, bank holidays are typically just choppy and consolidation. So just to give you guys another example here, let's say I was going into the week of October 13th to October 19th, then how I would be framing my high probability opportunities is by looking at the economic news calendar. So if Monday has a gray folder, then I'm not too interested in trading. How I look at it is if there's a bank holiday, then it's also my holiday. If there's no news, then I'm going to be more cautious entering the market that day. And then if there is high impact news, then typically that's when I hunt for those high probability opportunities. And so, if I were to go into the week of October 13th to October 19th, I would be looking at Thursday as my highest probability day to look for some sort of opportunity. For Tuesday, Wednesday, and Friday, I would expect maybe less movement overall in the market. Moving on, the major volatility injections you're going to want to pay attention is called the big three. And so this is going to be your FOMC statement, your non-farm payroll, and your CPI. And so on Forex Factory, FOMC is listed as FOMC statement. NFP is listed as non-farm employment change. And on Forex Factory for CPI, it is listed as just CPI or core CPI. And so the reason why we want to pay attention to these big three is because these are the most volatile of all red folder news. And so just to give you a quick little rundown, the FOMC is a branch of the Federal Reserve that meets several times a year to discuss and set US monetary policy, such as interest rates. And so their decisions are usually highly anticipated by traders because changes in interest rates can influence everything from stock prices to currency movements. And for example, if FOMC raises rates, it can signal tighter monetary policy, potentially strengthening the dollar and impacting the stock market. So, one thing you need to really understand for intermarket correlations is that the interest rates affect the dollar. And because we're trading, let's say, index futures or trading currencies, the dollar has a very big impact on everything else because it is the leading currency as of right now. So whatever affects the interest rates, it's going to affect the dollar, which affects whatever asset we're trading. And that's why FOMC is a very key event to be paying attention to. And we do not want to trade before FOMC. And when I say before, I usually mean the day before FOMC, the day before NFP, the day before CPI. You tend to want to avoid trading those days because it is lower probability. It will be more choppy and engineering liquidity for those big events. And also, of course, the news event itself, you do not want to be trading it because there's something called slippage. And if you get slipped, it means your order may not get filled at the price you anticipated. So let's say, as we go back to the analogy of liquidity, right? Our stop loss. If you place our stop loss at a specific price point and FOMC, NFP, CPI, one of the big three, occurs and goes against your position, then because price is moving so fast, it could fill you at a much worse price than you anticipated. So instead of losing $200 where your stop loss is, if price moves fast enough against your position, then you could actually lose a lot more than $200. Let's say $800 or $1,000. So you don't want to do that. You want to always wait for one of the big three to play out first and then look for opportunity afterwards. And usually, I would say 15 minutes after the news is released, that's the safest time to trade. So stop trading the day prior and you can start hunting for opportunities 15 minutes after the news event has been released. And that's usually the safest spot. As you become more experienced in trading, you will for sure be able to navigate these news events a little better. But for now, just try to avoid it altogether because it is somewhat unpredictable sometimes. It could just go against you. So moving on, the NFP report is a monthly employment report released by the US Bureau of Labor Statistics that shows the number of new jobs created in the previous month, excluding jobs in agriculture. And so the NFP is one of the most closely watched indicators for gauging the strength of the labor market. And a strong NFP report can signal a growing economy, while a weak report can suggest a economic slowdown. And so the NFP releases can cause significant volatility in markets, especially in currency pairs like Euro USD. And so once again, NFP is very important because it signals the labor market, and the labor market is a very big indicator to whether our economy is doing really well or it's doing really bad, which once again heavily affects the dollar. And so whatever heavily affects the dollar will heavily affect any other market that we are trading. And so last but not least, you have CPI. So the CPI measures inflation by tracking the changes in price of a basket of goods and services over time. It's a key indicator of inflationary pressure in an economy. Traders watch CPI data closely because higher than expected inflation can signal potential rate hikes by Fed, which are interest rates, right? Which will affect the dollar once again, and impacting the bond and stock markets. And so it will insight into the cost of living and overall economic health. And once again, very important statistic. And all three of these things really indicate whether the economy is a recession or not. So overall, we will not be watching the news events or the numbers of the statements themselves, but we're just going to be watching price action. Whenever you have these events, you're going to have an extremely volatile move. And I highly encourage you to go into your chart and just, whenever you're studying price action from now on, just go to Forex Factory, and whichever day that you're back testing or you're studying, make sure that you're paying attention to the news events on that day, because if you put a vertical line there, you will see that there is a extremely high volatility injection. And just for reference, FOMC meeting minutes is not the same as FOMC statement. So for this one, you can just treat this as a regular red folder. The only time you should be looking for one of the big three is if it says FOMC statement. And so here I can just go and show you one. Right here, it's going to say FOMC statement. And so if we go back in time a little bit, I'll show you guys why you don't want to be involved in an economic news event like this. So let's say on Friday, we had our non-farm employment change. So if I were to go to my chart here and show you what happens at 8:30, right at 8:30, you see this extremely large candle right here is a very volatile candle. And so that's what you want to avoid. After the candle forms, you can look for a setup to form. And so for here, there's a short that formed after the news event, or a long you could have taken after the event as well. For an example of FOMC statement, here we can see on September 18th, we had FOMC statement. And so you just go back to your chart, go look for September 18th, right? And then at 2 o'clock, once again, you just want to pay attention at what is happening during these news events. And you can see here that if you try to trade this, it actually ended up wicking both sides. Wicking both sides, meaning it spikes lower and then it pushes higher really aggressively. So you, once again, want to avoid these kind of conditions, because let's say your stop loss was either at the low or the high and you decide to enter right before FOMC. Well, this spike lower in price, if your stop loss was here, for example, then it would have just absolutely slipped you. So even though your stop loss is placed at this previous low here, let's say, for example, at 19673.25, because that move is so volatile, you'll most likely actually get your order realized or your stop loss realized when price is much lower. So let's say 19643.00, because it was so volatile, that's where you get filled. And so you end up losing double the amount you intended to lose. So that's why we try to avoid these events. And last but not least, here we have CPI. We can see on September 11th, here it says core CPI, CPI month over month, CPI year over year. This is what it's going to look like whenever you have CPI occurring. So here we can see September 11th at 8:30, right? So we're going to go on our chart and look for September 11th at 8:30. So that'll be back here. And once again, just putting a vertical line here to delineate that this is the 8:30 mark. And you can see that this news event specifically wasn't as volatile. However, it usually is. And so just trust me on this. Whenever you see one of the big three, do not trade before it. And you can see here that we actually end up having a perfect accumulation, manipulation, and then distribution higher anyway. So once again, waiting for these news events to pass first and then looking for opportunity is always going to be your best bet. And so that's pretty much it for this lecture here. I just wanted you guys to be aware of these volatility injections, because sometimes you just see speed in the market where the market just suddenly moves really fast. It's because of these volatility injections. And so once again, for index futures, if you're trading in the American index futures like I do, ES, NQYM, you could also include RTY in there if you want, then that would be at 9:30 a.m. EST. For the economic news calendar, every week, every day, you have to be paying attention to mainly your red folder news that your currency is correlated to. And so you can also be aware of the orange folder news because sometimes they can cause volatility. However, I personally don't really pay attention to it that much. I usually pay attention to just the red folder news. And then last but not least, these are must pay attention tos are the big three, which is FOMC, NFP, and CPI. So in my opinion, no matter what asset you're trading, always make sure you're aware of USD news events because that is the leading currency as of right now, right? So on that note, I hope you found this insightful. As always, have a great day.